Hi there, welcome to Trendsignal's Trade of the Day. My name is Joel Tremler. I'm going to be taking you through a DAX trade that we had trigger last night. When Trendsignal clients open up their charts, what happens is the system will run a scan for them. The scan will then provide a number of different markets. We're going to look at the German Dax or the German 40 that Adrian had a look at in the webinar last night. He called this trade just as the webinar was on. We have a new members or a new client for people that are interested in learning trend signal webinar held on every Tuesday at 7 p.m. He called this about 7:45, 8 o'clock-ish. The price was slightly different at this point, but what would normally happen for a trend signal user of the system is that at 10 p.m. when this candle closes, they will enter that market. Now, to look at the close price, first of all, we can see at the top here we've got the German Dax. We then have the D1. It means a daily time frame. Effectively, each one of these candles takes a day. You can then see that there's a H, an L, an O, and a C. That stands for high, low, open, and close of each candle. And then there's the date. So if I hover over this particular candle, the date was the 23rd of January. Our close point is 16674.74. That is the entry point that most of our clients will have been using because they'd have been placing that trade around 10 p.m. in the evening. We then need to look for a target and a stop loss level. So for a phase one trader, somebody who's just following the system, letting the system do all the heavy work for them, they follow an aggressive stop loss level and a starter target level. In which case, this particular one had a 118.6 pip stop, and you had a 167 pip target. You'll notice there's a red line on the chart and a green line on the chart here. Those are our starter targets and aggressive stops. Effectively, from this point, we'll notice this market went upwards. It got within 8 pips of our starter target. For those phase one traders, they would currently still be in this trade. For those people that are a little bit more risk adverse, but are also happy to make their own decisions based upon these markets, you went up to 8 pips within your target and then pull back a little bit. A lot of people will have already closed this trade out in the banking of profit, especially if you are risk adverse. You want to be in and out quite quickly, in which case you might have made, say, 150 pips of profit, 145 pips of profit. Still better than a 1-to-1 risk reward ratio. In this case, when we look at our trades, we typically look to risk 2% of our account. This account here is based upon one of the demo accounts that we use. So you're risking 2% of that £13,000, about £260 on that trade. And here you're looking to win about 1.4, 1.5 times. If you look at that, our 167 pip target divided by 118 pip stop loss, looking about a 1.4%. At 1.4 times risk reward. So you're risking 2% to make about 2.8% in profits. And in this case, like I said, phase one traders, you'd still be in there. Those that are risk adverse, but also reading the markets, understanding what's going on, may have already closed this trade out for a better than 1-to-1 risk reward. But you probably wouldn't, you wouldn't have the full 2.8% profits purely because it hasn't hit its starter target yet. So that is our trade of the day. Thank you very much for watching, and we'll be back again for one tomorrow. Bye-bye for now.